Is multifamily that great anymore? I did this deal recently that said, is multifamily over? Had a ton of interest in it. People had all kinds of ideas and comments and saying you're crazy or yes, it's over. I want to know from you, what do you think? Is multifamily over? Well, I've got some opinions about this, why I think multifamily will be here for a very long time, why I still think it's a great investment to jump into now, but we are seeing some headwinds. We're seeing higher rates. We're seeing investors not wanting to invest. We're hearing rumors of capital calls. And what should investors do? What are the options, right? We're going to go over this in 3 easy steps, and I'm going to share a quote for you at the end, so let's jump in. All right, so welcome. My name is Bronson Hill. I am the CEO of Bronson Equity. We've got about $200 million in multifamily assets. We're also doing other assets such as ATM machines and car washes and oil and gas deals and things like that. I want to share with you what are the benefits of multifamily investing. This might sound a little basic for some of you, but it's important to come back to why we love multifamily investing, right? So there's benefits of cash flow. You typically get cash flow from one of these deals. You'll get tax benefits. Again, we're talking about multifamily syndication, particularly for active and passive investors that are investing. There's an inflation hedge built in, so as prices rise or as costs rise, you can typically pass those down by way of higher rents. We can see in this chart that rents and inflation tend to go hand in hand, which really, this is different than single family, where you can just kind of raise prices as inflation rises and as those rents go up, which is amazing. Another amazing thing about multifamily deals is that you can use leverage to buy them. Typically, you're putting 20 to 40% down, so you're going to use the majority of someone else's money, right? You're able to use cash from the bank to be able to buy these, so whether you're an active or you are a passive investor, you get to take advantage of that. And one of the advantages, if let's say you put 20% down or 25% down and the property appreciates by 25%, well, you haven't increased your equity by 25%, you've doubled your equity, right? You only put 25% down to start with. So really amazing, some amazing things there. It can be a passive investment, meaning if you're a part of a larger deal, you're not the one running it, you can get great returns. I found much better even than single family investing. You're getting better returns and you're not having to get those headache calls of what do we do in this situation, or we've got a plumbing issue in the middle of the night. And even if you're a property manager, you're familiar that it's really not passive when you're doing single family. So this actually is something that people can invest in passively and benefit from those things. It has a great risk profile. It's much less volatile than the stock market. So we see stock market has all these huge swings going up and down, and we don't see that in multifamily real estate. And then also there's just incredible demand. I mean, there's several articles that have come out recently that have said that we're 4 to 8 million apartment units short, and this number we expect to only continue because of population growth. We also, because of the slowdown in development of new apartment buildings, we expect this number to continue to grow, particularly for affordable housing, because typically what is being built in the apartment space is not workforce kind of working class housing. It's typically class A brand new luxury apartments. So the stuff that we do is more value add stuff, kind of similar to this, where it's older properties that are 30, 40 years old. We renovate them. We're able to see some positives there. So just some real benefits of multifamily investing. Love, love, love it. Definitely is the bread and butter. I think if you have not invested passively in any deals, I think it's a great place to start is in multifamily investing. So really, what are the risks and challenges of multifamily investing? Because every investment has risks, right? I invest passively beyond what we do in our Bronson Equity portfolio. And, I always try to break it down to what is the 1 or 2 primary risks I see that if this doesn't go well, it will be something that causes a loss or for things not to perform. And so right now, we're seeing interest rates being higher. We're seeing costs being higher. A lot of insurance has risen. Some markets we're in, labor costs and material costs have gone up 30 to 50%. And some operators are struggling. My friend Ken McElroy has said that 2023 is the year of operations. And I think that is true. What that means is that if you as an operator can operate deals and you really can come in, you can reduce expenses, you can find a way to have great staff, you can really perform on the plan that you said you're going to set out to do, then that is something that's really going to help you. Newer operators, ones that maybe don't have experience in a certain market, there could be some struggles there, right? And so I think that's something that people are really looking at right now. But it really comes down to executing the business plan. And so what do you do as a passive investor? How do you check this, right? Well, a few things. One is that I always like to have somebody on the team who's been doing this with this asset class for 10 years or more. And so, when I see that somebody's got experience with this asset in this market, there's someone on the team who can see a problem before it comes. There's really no substitute for a lot of experience. And then the performance. What is the prior performance? What is the track record? What are the issues that have come up before? What have they learned from that? Those are all very important things. So the question really with all this is multifamily investing right for you, particularly right now, right? It may be right for you later or before it was before, but is it right for you right now? Well, it comes down really to your risk tolerance. It comes down to your risk profile. I like diversifying, but I think I remember this call I had with an investor, an older investor, and they were just like, hey, where's the cash flow in this deal? We've had a few deals that we've paused cash flow because of interest costs and insurance costs and other things come, just to be very conservative on some of the cash management. We don't want to have any sort of capital situation where we're having to go to investors. And so right now, cash flow is a very tough thing in multifamily deals. A lot of people that I know that are doing multifamily deals, unless it's been a deal that's been in existence for several years, usually there's this cash management, making sure that you're managing them well. A lot of times people have interest rate caps, meaning they're capped. They got an interest rate. It was won't go 2% above a certain amount. So like some of our stuff won't go above 6% or 6.5%. But if some people don't have caps, they have other issues. They could have other major issues. So right now we are finding that it is a little more challenging to find deals that pencil, to find deals that make sense. There are unique situations where somebody's assuming a debt, they're assuming a loan, they're finding something creative, even with seller financing, to be able to do where it is something a little bit creative. Investors in general are a little more cautious right now, so we're seeing that. So I have seen typically over the years, multifamily has been a great long-term strategy. It's produced typically a lot of appreciation. So again, you have appreciation and you have cash flow. It's produced a lot of appreciation. The cash flow right now in some deals has been a little non-existent. And so I think that's something, if you need cash flow, there are other types of deals that produce more cash flow. And I'll talk about that here in a minute. But owning all this stuff is great if you can manage it. I believe rates will stabilize at some point here soon. That means that instead of them continuing to raise rates, we have seen rates continually rise. And now the Fed is doing a pause. Are they going to keep raising rates? Are they going to drop rates? I think when we get that first drop and the Fed clearly indicates that, hey, we're actually going to start lowering rates now instead of rising them, I think a lot of money is going to flood into multifamily, particularly in lending, as well as just investors like coming back in. There's a lot of money on the sidelines that's really waiting. And I think looking back, just kind of to wrap it up, I think looking back, we're going to say, man, I wish I could have owned more stuff right now, because there will come a time where it's very favorable to own it, where we see the demand, we see rents higher, we see some of the lending starts looking better. But right now it's kind of that in-between time where it's kind of hard to get deals to pencil. But if you have a good operator, you can do things well. I think it is really important to look at. So that's kind of the conclusion there. Is getting started. You can get started with other deals. We've started doing other deals right now just because we're seeing. There's a less great multifamily deals out there. Some people would argue with that, saying, no, there's a lot of great deals out there. But we're seeing some challenges there. So we're doing some other things, right? We have actually gone into ATMs, car washes, oil and gas, other types of deals as well. But I want to share this quote with you, and I think it kind of sums up about what investing should really look like for you. This quote comes from Paul Samuelson, who said, investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. That would be a lot more exciting, right? But great investing should be boring. I want to share this video with you. These are the three, my three favorite investing classes outside of real estate. You can check it out here. Really enjoyed putting that together. If you haven't joined our investment club, I highly encourage you to join it. We're doing deals in multifamily and oil and gas. We're doing ATM machines and car washes. Would love to have you join and let you know about these awesome deals that we're doing. Thanks for taking the time to educate yourself. We look forward to seeing you on the next video.